Hi, everybody. It is time for our Wednesday webcast, and we've got several registered, so I'm going to give everybody a minute to get logged in. Let me get my lights on, and get my Q&A panel up. I had all of this ready to go, but I was a little early, so let me reset everything. Well, hi, Devontae. Q&A, participants, and chat. All right, let's see. People are still jumping on, so let's give it a few more minutes. I'm doing this Wednesday webcast by myself today. I don't have any co-presenters or anything, which sometimes makes it a little bit harder to filter through the questions, but not. We've done these enough that I can get through them pretty quick. We do have a ton of material. I'm not sure if it's appropriate to do these two topics in the same session, but I have all day, frankly. So I am happy to stay here as long as questions keep rolling in. I will just keep answering them. Oh, whoops. All right. Good morning, everybody. So I'm excited. So we have a new hire that we just hired into the firm, hasn't even started yet. Just accepted our offer this week, Devontae, and he is on watching. So this will be a good introduction to see what I do. I like to, he already knows I like to talk. So I don't necessarily like to see myself on camera, but I'm just a little bitty square, so it doesn't bother me too much. I just ignore it. Anyways, okay, we're a couple minutes in, and like I said, we've got a lot to cover, so we're going to go ahead and get started. Rules of the day. If you've got questions, I will absolutely do my very best to answer everything. If I don't know the answer, I will tell you I don't know the answer. I tend to be a little bit less conservative than many that you might run across. So I will give you my thoughts, but I try to qualify that with, but we don't know yet, because there's kind of a lot of that still going on. But anyways, so 4 questions, if you'll put them in the Q&A panel, the Q&A section down on your Zoom toolbar, you'll have Q&A. That helps me facilitate, because I can mark what's been answered and go through them that way. Makes it really easy. Chat is, I'll kind of check it, but it's not nearly as workable for me, because things can get lost if everybody's in there posting questions. I'm still getting my caffeine down for the day, and I do have a big thing of water over here. Those that don't know, I did just have sinus surgery 3 weeks ago tomorrow. I was not prepared properly. I blame that on the doctor. And so it was a little bit brutal. So just bear with me. I've got tissue. If I have to grab that, I will. All right, let's get rocking and rolling. The Wednesday webcast is a new series that we're doing. I intend on doing these not every Wednesday, it's just too much, but I'm trying to do the first Wednesday of every month. In November, the first Wednesday we covered financial and tax planning considerations, with really the focus being, hey, a lot of agencies are in a better position now than they were financially, than they were before COVID hit, because business didn't drop that much, and you got all these extra resources to help you pay for things and cover payroll and cover extra expenses. And so that was our first Wednesday webcast. I had E3 Wealth in with me, Jennifer Taylor. It's on our YouTube channel if you want to look for that. All of my webcasts will always go on YouTube. all of my messages that I send out, if some news comes out, and I send these video messages, they go on my YouTube channel. So if you go to YouTube and you search search Night CPA Group, you will find our YouTube channel. If you subscribe, if you've got the app on your phone, you'll be notified every time I post something, which is not all the time. It's not going to drive you crazy. It's not even weekly. I mean, surely I'm doing something monthly. That's my goal, and maybe a couple times a month. But anyways, that's a great way to stay informed and stay connected, because there will be times that I need to get a message out to clients en masse, and instead of writing a long detailed email, I'll do a video and put it in an email, link to it, and they listen to that far better. I like to think it's because they like to listen to me, but they've argued otherwise, that that's not necessarily the case. It's just easier. So anyways, today we're going to go through the Provider Relief Fund and the PPP loan forgiveness program and give you just kind of an update of where everything stands. This was prompted because somebody was asking some questions, and I was like, I need to direct them back to my last HHS webinar. Well, the last free public one that I did was back in July. And so it just kind of hit me. I was like, I really need to do an update. So this will be our last update before the year ends. And honestly, it might be the last one we do before the reporting really starts taking effect, unless they postpone the reporting, which I have a suspicion they might. We'll see what happens. Disclaimer, you have not hired me. So take this with a grain of salt. I'm trying to share education. Everybody's situation is going to be very unique. If you've got a unique situation, then you have a very specific question, you probably need to get somebody to answer that for you specifically, okay? So agenda, I've got it broken down into two. Yes, will you be able to print out the presentation? Yes, and I am known, so this is a good example of this is a very, honestly, I've got 62 pages in this slide deck. I'm going to go through some of it real quick, but what I do is I try to put that content in there so that you can refer back to it later and not have to, remember what I said or take a whole lot of notes. You still take notes all you want. But yes, so after the webinar, tomorrow, probably Friday, it's set for 2 days, you will get an email that will have a link to the slide deck and a link to the recorded webinar on YouTube. Totally free. Download it, view it, share it with friends, whatever you want. Those will come to you automatically. A, if you're here, and B, just in the future, if there are other topics that I'm covering but you can't make it, just register, and it's perfect. We have 261 registered last I looked. We currently have 132 people sitting here. I get about 50% that show up live, and the other 50%, they know if they register, they're going to get the links afterwards, even if they miss the webinar. So that's kind of key. Just go ahead and register, show up if you can. If not, you're still going to get the materials. So yes, that will be posted and sent out to you. Okay, so first part, we're going to go through HHS Provider Relief Fund. We'll hit an overview. We'll look at eligible expenses and this newly defined lost revenue, which has been tweaked yet a couple times. It went really negative, and now they've kind of come back and made it a little bit more favorable. So we'll look at that. We'll look at the reporting requirements, auditing, and how to deal with it on tax and cost reports. Wrong arrow. Where's my arrow buttons? Okay, and then we'll jump into part 2, the PPP loan forgiveness. We'll do a preview, just a really quick recap of that program, and look at the forgiveness, how that's going. We're processing lots of those applications, so I can give you a real-time update on how that's going. We'll look at those reductions to forgiveness. There is some news out about some of these safe harbors and exemptions, and then we'll look at the easy form, which is what we're mostly dealing with. So let's just jump right in. So this Provider Relief Fund, also known as HHS stimulus payments, this is what Medicare has been pumping out. I say Medicare, HHS has been pumping it out. Started with Medicare providers, then went to Medicaid providers, then brought in other providers. And now this phase 3 is application period is closed, but they haven't sent it all out yet. Is basically for anybody that might have had second thoughts, and it opened it up to like behavioral health categories. And so it's kind of and also trying to get everybody up to at least the 2% of net patient revenues. And then if you had extreme hardship over and above that, they're reviewing that and seeing if they can distribute more. We don't know what that looks like yet. We haven't seen any of it come through. You did have to apply for it though. A lot of the rounds you didn't even have to, the very first one you didn't even have to apply for. So this all started back in April. There are terms and conditions. And so basically if you take the money, you then have to sign an attestation that you understand the terms and conditions, which essentially tell you that this money is to be used to prevent, prepare for, and respond to coronavirus. That's very, very broad. Nobody knew what that meant when it first came out. They've started to try to clarify that. Unfortunately, nobody's had to do any reporting yet, so we just don't know what they're going to allow. So we've done a lot of educated guessing. A lot of the professionals and consultants like myself have come together and said, what do you think this means and how are you interpreting this? I'm listening to the big firms. We're a small firm, but this is all we do. For those that don't know us, I didn't even introduce myself. I do that all the time. Amy Knight with Knight CPA Group. A long time ago was Amy Taylor with Amy Taylor and Company. Same firm, just got married. I tend to think everybody knows me, which they don't, and that's okay. So we're a small firm, but this is all we do. Home health, hospice, nursing home, assisted living. We stay in that realm, and it's my passion and what I stay on top of. So been leading on those bigger firms because they're really close to TAC. I'm a member. I'm working my way up there, right? And so anyways, they're getting valuable information and sharing it with all of us. So I say, do not restrict yourself to one or two sources of information. Get it from every source you can get it. The reporting is now required for anybody that got over $10,000 in total from HHS stimulus or any other FEMA kind of government assistance. Not PPP, doesn't count, but the HHS, FEMA, that all kind of counts in this. It's a government award, and so you're going to have to do reporting. Again, the allowed uses are not very well defined, and so it gives us a lot of room for interpretation. The problem is we don't know what they're going to accept yet. Replace of lost income, loss of income, lost income. That's been redefined, lost revenue, and it's, we'll get to that. We'll have a discussion about that. So they do expect you to completely spend these funds by June 30th of next year. If not, they will be paid back or recouped. You can return it. If you're like, I just don't need this money, I can't justify it, then you can absolutely return it. If they find any to be inappropriately used, they will recoup it. And this is where we start getting nervous. Like, what are they going to accept? What are they not? And these funds cannot be used for the same purpose that other fund sources are covering. So PPP loan, you can't claim COVID wages on HHS and PPP, one or the other. But then also like the vaccines, flu vaccine is covered by Medicare. Now, some of the related costs that Medicare doesn't cover, they cover the actual vaccine cost. So you can't claim that, but setting up a clinic to administer it or a tent or whatever, that could be, and maybe not flu, but coronavirus vaccine, I should say. Those costs are allowable under HHS. They did come through and clearly state that. So that's in the FAQs. I will tell you, everything we are learning is pretty much coming from the FAQs, the frequently asked questions on the HHS Provider Relief Fund website. I do have links later at the end of this section or at the very end of the presentation to all those various websites. I actually also have them pulled up in the background if we should need them. And then you might also be audited, which kind of goes without stating. So post-payment notice of reporting requirements, the last update was kind of September 19th. That's what they came out and said. Okay, you're not going to start reporting until January. We'll get to the due dates in a minute. And they kind of started giving us a little bit more information. There's the website. Again, I do have it posted later as well. So here are the due dates. Originally, and I want everybody to hear this, originally, most recently, they were saying the portal will open October 1st and you can start reporting. That went away. Now they're saying the portal will open January 15th. You must report anything spent in 2020 must be reported between this January 15th and February 15th deadline. So your deadline that you need to be aware of is 2/15/2021 as it stands now. And that will be for all expenditures, any spending that was done in 2020. So if you've spent everything, you've justified everything and spent it all in 2020, then you report once and you're done. However, if you still have funds left over, you do your initial reporting for all your 2020 spending, then you will have to report again between July 1st, July 31st for everything spent through 6/30. And again, anything not spent by that date then has to be repaid. So those are kind of the dates that you want to be aware of. If I were a betting man, I would guess, I think the deadline's going to be pushed back. I could be wrong. Maybe I'm wishful thinking the deadline will be pushed back just a little bit, even just to the end of February, because January is a brutal reporting month for anybody in the accounting world. We got W-2s, 1099, all the 1099s, all the year-end payroll reports, and then just closing out the books and all that. And to do this reporting, that lost revenue piece, your books have to be finalized. Well, I don't know anybody's books that are finalized on January 15th. It depends on if you're cash basis or not, maybe. So I'm not going to be surprised if it gets pushed back. We'll see what happens. We need a plan for 2/15 though. So this is a lot. I'm not going to read this to you. And I am going to update this before I send it out, because I know for a fact that this section on this lost revenues got changed favorably. So I'll just go through the history. So they came out all of a sudden in September and said, so originally we were saying lost revenue, missed visits, lack of referrals from your elective surgery doctors, document it, put a value with it. You know what the value is, you know what your average HHRD payment is, you know what your daily hospice rate is, here are your missed visits or your missed episodes or patients that say, I don't want you in the home, and you could quantify all that. That all went out the window September 19th when they came in and they said, oh, that's not what we meant. We know we said lost revenue, and me being a CPA, revenue to me is that top line. That's revenue in the door. It has nothing to do with expenses. Well, they came back and said, no. What we really meant was change in net income, bottom line. So patient revenues netted with all of your expenses. So they're looking at 2019 first quarter, second quarter versus 2020 first quarter, second quarter. And what was your change there? Net income change. Well, that was not going to work out well for a lot of people. And then they went further to say you can only claim up to your 2019 gain. So let me paint a picture. I don't want to spend too much time since this is out the window, but I want you to see where we've gotten through our grassroots movements, and like TAC, the Texas Home Care Association, and hospice, for really pushing on legislatures. So say you had a $5,000 gain last year, right? I mean, you didn't have a loss, but you didn't have a lot of gain. But then this year you have a $50,000 loss. Well, what that says is that change, 5,000 plus 50,000 minus, that's a $55,000 change. But, you only have 5,000 in income last year, so you can only claim 5,000 of it for that HHS payment. They stripped that away. That's gone. So now, if you had a loss in 2019, you can claim enough to bring you up to flush, to zero. So if you had $5,000 loss in 2019, you can claim 5,000 of lost revenues to bring you up to zero if you have a bigger loss in 2020. Now, what happens, and I have it better on, I'm getting out of order. I have it better on some following slides. If you did better in 2020 than you did in 2019 on revenue, and so they also stripped out, they're no longer netting it with expenses. So now they've actually gone back to lost revenue. So now the big difference between when we originally started all of this and now, it is now gross revenue that they're looking at. But instead of letting you quantify, hey, I was scaling and I was way above where I was in 2019, but we still dropped. But we didn't drop below where we were in 2019. If that's your case, you're going to be not penalized, but you're not going to get any benefit. Originally, we thought, okay, you're scaling, and then you can show this drastic plummet. That plummet from where you were right prior to COVID, you're going to get to count that and use HHS Provider Relief to reimburse you for that loss of revenue. That's no longer the case. They are now looking at a year-over-year comparison. So if you did better in 2020 than you did in 2019, you don't get to use it at all. I don't make the rules, I'm just delivering the rules. They've been very clear on that. The other thing that they've been clear on is that they want you to first apply this money to expenses. So when you go to do your reporting, you are going to want to dig out any and every single expense that's COVID related and use the money up that way first, and then look at lost revenues. So let me get back into, and I apologize, let me make a note here. I need to update slide 13. I'll get that cleaned up before, it was kind of late last night when I was putting these together. I apologize. I put it all on here because this is straight off of the reporting requirements PDF that they put out. I just wanted to replicate it. It's kind of crammed in here. You got to give your demographic info. There's going to be two different there's really three. If you got under 10,000, no reporting. If you're between 10,000 and 500,000, which is where most of my providers, my clients are going to fall, you're going to have reporting, but it's going to be a little bit summarized. If you got over 500,000, it's going to be more detailed. And it's really just, I don't even think it's that big of a deal because you're going to have your expenses hopefully broken down into this level of detail anyways. So really for this under 500 reporting, you're going to add them all up. You're going to report this. I need my little pointer. Where's my pointer? Okay. You're going to report at this level. You're going to report your G&A expenses, which are general and administrative. So all your overhead, anything that qualifies, that's in that bucket, but it qualifies as a COVID expense. And then healthcare related expenses. So that's going to be like your direct patient care. And I really should put that on that slide. That's going to be your direct patient care. That's all the breakdown they want. No further breakdown. And we will go through some examples of expenses. So we're getting to that. Now, if you've got over 500,000 in payments, you have to break down your G&A expenses into these categories. Again, not that big of a deal. Most of you keep your books that way anyways. I hope you do because you need it for cost report. And you would also need to break down your health care related expenses, so your direct care expenses, into these categories, okay? So that's the only real difference. I don't think it's that big of a deal. So let's get into like, what are some COVID attributable expenses? And the way I look at this is think about back in the day, when we had stamps. We're super paperless here. So I gave away a bunch of stamps, but you had a little stamp that said posted. So you knew it was posted in the system. I think about it that way. If you get an invoice from a vendor, or you pay a bill, any expense, and that was related, you only did that because of COVID, stamp it, stamp it, stamp it. I'm going to go way further than that. I'm going to go that if you need to explain it to me, then you need to explain it to your management team, your board, and put it on a document. You had a management meeting, you had a board meeting. Hey, we met and we feel like it is critical that we take these steps in response to COVID. And these are the vendors we're paying, like be super detailed. So a few examples. Multiple people I know have rented office space adjoining. Think about the big, the big office spaces like in Houston and Dallas, where it's super easy to knock down a wall and absorb the space next to you. All of that, if you're doing that so you can spread your people out. Now, if you're doing it because you grew, because you went, you got aggressive and you went and saw patients and you educated them and whatever, and you just kept growing, that may not be why, if you're just going to expand. But if you did it so you could space people out and not have to run so many split shifts, then by all means, to me, that is completely legit. You've got the build out cost, the furniture cost, new equipment, all of that is so you can space people out. All the plexiglass, right? That one doesn't even need explanation. You put plexiglass at the front desk so that, whatever. If you put plexiglass between the partitions, sterilization, sanitation, if you bring in a special cleaning crew, again, no narrative needed. All of your PPE. I have been asked multiple times to put together a list. I'm hesitant to. The reason why is because if it's in writing, anybody can use it and they can misconstrue it to say that I'm saying, excuse me, these are legitimate expenses that I know are going to be allowable. Now, if we were talking about a cost report, I know what the unallowable expenses are. I can make that kind of list. On this, we don't know yet. I mean, this is where I say I'm less conservative, because I think if you can build an argument for it and you feel like you could stand in front of a judge, let's say, and say, guys, this is why we did this, it's completely legit, then I think that should be allowable. But I don't know yet because we haven't seen yet how tough are they going to be? Are they out to prove that you did it wrong? Or are they out to say, great work, we're so glad you guys kept care continuous and going, and give you a pass? We don't know yet. Because none of this reporting has started, there's just too many questions. So that's why I don't put together a list. I'm happy to blurt them out and talk about them. These that are listed here, these are ones that HHS put out. This is off of their information. Of course, all of your supplies, all of your equipment, workforce training, all of this, these webinars, if you've had to pay for any webinars, that counts. If you're paying for any kind of compliance consultant to come in, if you're paying me to help with your PPP or your funding, all of that counts. Developing emergency operations center, reporting and testing the test results and the testing of it. Again, temporary structures or even permanent, in my opinion. Acquiring additional resources to preserve or expand care delivery. That is exactly from their words. So let's go back to my example a minute ago. I said, well, maybe if you're just growing, that might be a little bit harder. Again, how good are you at arguing? Are you growing because the agency down the street did not withstand and didn't want to deal with it anymore and they bailed? And so you're growing, you are expanding your care delivery. Maybe that's arguable. They do say that all expenses, and this is something a lot of people don't know, they should be incurred after January 1. But what that means is you can go all the way back to January 1. So in March, when you were stocking up on PPE, go back and count it. I mean, this is going to take some work of digging through your records, but it's going to be worth it. Hi, Sonal. Sonal asked about expanding the facility next year to provide social distancing. Yes. And it actually goes even further. And Paul is the tax guy around here. But when you start looking at build outs and office space, you start talking about depreciation. There is language that if it was for COVID, I believe it can be expensed this year, which is good. I don't know that it has to be depreciated over long term. So that's good. That's real good. So, but yes, absolutely. Expanding the facility for social distancing. Again, this is where I think it's worth it to say, do a minutes or a memo that says, somehow I had time and just I know. Okay. James, the presentation will be made available afterwards. And a good thing, because I found a big O section I need to update that didn't get updated with the latest changes. So that'll go out in an email probably on Friday. So, but thanks for joining late. You haven't missed a whole lot yet. So now back to that, make sure you document it. I think this is where you want a board minute of some sort that says you met with the board or the directors or whoever, and you made this decision, and be as detailed as you can, because we don't know yet how stringent they're going to be. Sorry. Okay, more examples. We've been over these a lot, but what about staff? This is where you want to get really picky on your staffing. When I say staffing, like your payroll and payroll items, do you have staff that is working and they're half just COVID compliance, keeping up with regulations, training staff for donning and doffing? Are you proud that I know that kind of stuff? It's only because I sat in on all those healthcare consulting. We did joint webinars. I learned so much on the clinical side. And so if that is a full-time position, make it a one-person full-time position and call Susie Q COVID compliance officer or COVID manager, whatever, but make her wages, instead of the pay item saying wages, make it say COVID wages. If you've got 3 people doing some of that stuff, then they need to clock in and out or report certain hours as this was COVID specifically. If you can trace that time and those wages paid back to COVID and it's clean, then you can include that as your HHS money. I think that's something people are probably missing out on. Another thing, all your work from home capabilities, right? If you've got admin staff that went home to work, did you have to buy them a laptop? Did you have to increase your internet bandwidth? Did you have to pay for internet in their homes? Like, what did you do? Did you bring in a like nurse line, the on-call triage kind of service? Did you do that because of COVID? Those things, to me, again, stamp COVID on it, call it COVID. My recommendation is thoroughly going to be that you capture more expenses than what money you had. So let's say you had $100,000 and you dug through and you calculated everything and you had 150 in expenses. I would document all 150 and let's report it, because that covers you if they decline certain line items. And if they do, and you're still covered, then it's not worth the fight of going back and arguing with them about it. So, okay, here's that lost revenue. And I know, I'm sorry, sometimes I'm confusing. I really should have updated those other slides. This is where we're at right now. You're going to calculate calendar year comparison of 19 to 20, actual revenue or net charges from patient care. So that's your gross revenue, prior to netting it with expenses. So again, this is going to be your top level revenue. They've gone back to that. The amount of revenues eligible for reimbursement is capped at the change from 19 to 20, or, and maybe I'm not saying, so whatever that change is, but I still think if you had a loss in 19, it's capped to bring you up to a 0 for the year. Now, it is an annual comparison, calendar year comparison. However, we will have to report it quarterly. Okay, just be aware about that. What about severance pay? Oh, that's a good question. So if you had to terminate somebody because of COVID, I think that's a stretch. I'm thinking. I don't know on that one, Carlos. I don't. That's one, you know what? Again, I would document it, explain it. I would, and my thought is going to be throw everything in the kitchen sink in there and see what they say. I don't know that that will be allowed, but I don't think it hurts to try, I guess would be my opinion. So here it is. If you have an increase in patient revenue from 19 to 20, you cannot use any of your PRF towards the lost revenue calculation. If PRF is not fully expended in 20, we talked about this. Oh, I'm sorry, we did not. If the PRF is not fully expended in 2020, then you're going to use the 2021, so January through June 2021, compared to the same period in 2019 to calculate lost revenue for 2021 in the same way that you did 2020. And let me back up a little bit because I think I kind of skipped over this. So the way this works, you've got this pot of money. They want you to first find HHS COVID expenses, apply, and you're treating this money as a reimbursement. So you've got a separate fund over here, ideally a separate bank account, and it's got your $100,000. And you go through and you say, man, I just spent $25,000 on PPE. All right, pay it, all is good. What I'm saying is almost like turn in a reimbursement form, not technically, but here is my invoice. Here's the line item highlighted. That was the PPE, additional PPE. And so I'm going to withdraw that money from the COVID account and put it in my operating account. And now I've paid myself back and I'm going to save that document. I'm going to put it in a file. I'm going to have a COVID file. So that, and I would probably even start a spreadsheet. Right here are all the draws I've taken out of that account, and here's the invoices that accounted for it. And then on your general ledger in your accounting software, most of you use QuickBooks. If you use QuickBooks, I recommend setting up a class that is COVID expenses or HHS Provider Relief Fund, whatever you want. So then in your medical supply line item, your expense account, you would just code that amount to that class. So then you can run a P&L by class. It'll show all of your expenses that have been coded that way. And that should all match. You should have that. It should match your Excel spreadsheet that you're summarizing it on, which should tie out to all your invoices that you have saved, which should tie out to the money you've taken out of the COVID account. Okay, that's the big picture. That's the expense side. Then once the year closes, we're going to close the books and we're going to compare revenue. And if there's a drop in revenue, then you'll get to justify more of that money via lost revenue, kind of go through the same exercise. You're going to have some work papers. You won't have an invoice, but you'll have a work paper like a revenue report that shows the two comparisons, your calculations, and then again, transfer the money and save all that documentation. That's kind of the big picture. I got a couple more questions. Hazard pay across the board or COVID bonus pay across the board to all employees. Absolutely, Misty. I am recommending that. I'm recommending that Christmas bonuses be considered hazard bonuses. And just the key is that you have a separate pay item for it. The government has been very favorable to bonuses, not only to frontline staff, but to the office staff also, because they know frontline needs the back office to function, right? So that answers that. How about staff on isolation due to COVID-19 positive test? That's a good point. What you should be doing, and I'm sorry, I forget, I think this is only eligible if you have less than 500 employees. So if you're a small employer, which is less than 500 employees, you should be claiming that emergency paid sick leave. So they're out on leave. You get a tax credit for it from the government via your 941 deposit. If you're getting that, you cannot claim those wages on PPP or HHS. And so I recommend you do that first. That brings up a later slide that's going to tell you those credits expire December 31st. So that's going to go away. So then I would say moving into the new year, if you've got somebody that's out because of COVID and you're still paying them, that's kind of like severance pay. I almost, I mean, you can easily say it's because of COVID, but the thing is, if they were working, you'd still be paying them the same amount. So I'm not sure. I would throw it in there and see what happens. I know that's not the super professional answer. What I think that my audience values from me is that that's exactly what I give you, is what I'm really thinking and maybe not what the perfect CPA advice answer is. So I'm just going to stick with that. It's gotten me where I am, and I think that's pretty good. So another question, one of our two divisions has reduced revenue due to COVID as compared to from 20 compared to 19. The other was almost the same or an increase. Separate financial statements. Okay. So separate financial statements, same tax ID, separate MPIs. Do we have to net the two? Because they have three divisions. Two have dropped, but one has basically stayed the same. Really good question, Brent. We're going to need to research that. It is probably addressed in the FAQs. Man, I'm going to default to say, I hope it's separate MPIs, so separate provider numbers, but I don't know that for sure. So if you'll email me, I'll get with you and get you an answer on that, or I'll at least know it's on the radar, and we'll look for that. We'll look that up. Yes, slides will be available after the webinar, probably on Friday. Let me get them updated because I have some boo-boos on them, and I'm going to find more. I don't have anybody that reviews them for me, and I probably should. How is COVID-19 test results considered expense? That's a good question, and it's specifically in there. So I'm guessing that if you have to buy testing, but I think they're talking about reporting the results. Now, also bear in mind that these instructions are written for everybody, but that's going to include your hospitals, your clinics, everybody. So maybe they have a whole department just doing COVID testing, then maybe that whole department's wages is all COVID related. So kind of think about those. Our census doubled from 19 to 20, but then dropped 60 in April. How would this work? James, that's exactly what, actually you're the one that joined a little late. So what happened is you're not gonna get to claim any of it. They've been very, very clear. It says, we were hoping in the original, it said lost admissions, referrals, missed visits, So we were like, oh, well, you were scaling, so you can quantify that before you dropped and basically compare the bottom to where you were just before the bottom fell out, right? And they're saying, no, you've got to compare 19 to 20. So if you were scaling, and it's happened to a lot of our clients, if you were scaling and you're still more, even after a 60 patient drop, you're still more than where you were in 19, you're not going to get to use the provider relief funds for lost revenue purposes. All right, let's keep going. We're about a third of the way through and probably more than that on time. Okay. This is additional what you're going to need to report. I will say real quick on the reporting, I did read that basically there's going to be an Excel type, some kind of workbook or worksheet to help you report, but you're not, and I don't even want to tell you this. If you're my client, you need to keep this documentation, but it doesn't sound like the documentation is going to be required with the reporting, especially under the 500,000 mark. But you are going to have to keep it all on hand for 3 years. And so in case they question everything, then you've got your argument to put together. What I'm advising is that you keep those records real time. You do it now. Don't do it in January or February when things are 4, 6, 10 months old. Do it now, document it, keep notes, write those narratives. I've never had to recommend writing a narrative to justify an expense. I think this is when it's going to be important to do that. It does not have to be fancy. Just document your thoughts. If you have more than $750,000 in aggregate from federal financial assistance, which does not include PPP loan, you have to have a single audit. I'm not going to get into that. Nobody I've worked with at this point, that's a big agency, okay? And they're probably already used to these single audits. Okay, tax treatment. This is the Provider Relief Fund, fully taxable, right? It's basically a replacement of income. They've said it's taxable since the get-go, so there's no question here. Basically, you just want to show it as an other income line item. You don't want to reduce your expenses, leave your expenses how they are, just show the amount used. and retained as revenue. Let's say you got 100,000. Here's the question I do not know the answer to. You get 100,000 in 2020, but you only spend 75. What is the recognized income? I know for accrual purposes, the recognized income is only the 75 that you've used, but on cash basis tax return, you're probably, I would say the conservative approach is you include the whole 100,000 on the tax return as taxable income. If you had to pay some back next year, it would then be an expense next year. That's a conservative approach. That's probably the approach we'll take. Cost report, again, same thing, leave all your expenses as normal, don't reduce anything. And then we're gonna have a separate line item to report that other income. Again, documentation, keep everything. Doesn't sound like we're gonna have to supply a whole lot at this time, but I want it ready to go, in case it's called for. Okay, let's jump into, I don't have any other questions. Let's jump into our other part 2, payroll protection program. This is just a summary, super quick. Oh, hold on, one more question. Can you use HHS money to pay rent, utilities for patients who parent laid off due to COVID and put patient in danger? I love this question because it just shows me the kind of heart that some of these agencies have. It's been posed to me before with a very thorough argument. And Stella, it might have been from you actually, and I still don't have a solid answer. The situation is, it's probably a PAS provider and the parent, so PAS provides care for kids usually. Parents got laid off due to COVID, can't pay rent. Utilities like electric, if electric gets cut off, and this is real life for some people, right? Electricity gets cut off, the kid's ventilator is cut off. And that, you know what that means, right? So she's saying, can we as an agency pay the rent and utilities for that parent to keep that kid alive? I don't think our government is that forgiving. But it's one of those that I would absolutely try it. I would put together that thorough explanation that you gave me via email. I would say that I would also add to it that you're doing this on a very selective basis. Maybe put in there that you're verifying that the electricity is about to be cut off. You're verifying this. And maybe also, I would say definitely, if you're going to do that, try to pay those bills directly to the rent, the landlord, the utility company, and not to the parent, so that then they could misspend it. I think maybe if you kind of cover your bases that way, again, hopefully you have enough other expenses so if it's disallowed, it doesn't hurt you. But what that means is, even if it's disallowed, I still think it's amazing that you're willing to do that. Use your operating funds, your general operating funds, to cover that if HHS denies it, right? I would include it. I just don't know if it'll be allowed. There is nothing wrong with including stuff and then it not being allowed. How much is allowable to your CPA payment for preparing COVID report, and what is expense accounting reporting called? There's not an allowable amount, it's just whatever your CPA is going to charge. I know what we're charging is $250 an hour, and we're doing hourly. We don't do hourly billing usually. And those that are clients of mine know that my billing system has not been perfect lately because we changed and it doesn't accommodate hourly billing very well. But we're doing hourly because everybody needs something different. So can the money be used for mask and hand sanitizers for patients and clients? I think so. I think that's absolutely fine. I've got lots of questions coming in. So let's see. Now, I will say on that accounting one, we are tracking that totally separate. So I can show, hey, this was our regular accounting work. Here was our COVID work. So you get a separate invoice from me that shows that it's COVID work. So that'll help justify it. When calculating year over year lost revenue, do we include only expenses directly related? You don't include any expenses. So that's why I have to fix those slides. They've actually come back our way and said, no, it's going to be before netting expenses. So before deducting expenses. So it's going to be just straight revenue. And okay, and I think this next one is on PPP. Okay, well, I'm going to answer all of that in PPP. So in this section. So let's jump onto this. Again, this was that money that they rolled out. Yes, we're still accepting clients. And I can just email me. So lost my train of thought because I know my engagement letter needs to be edited. Paycheck Protection Program. We all know what it is. Everybody applied for it. Everybody's now moved into the forgiveness stage. Again, here are your allowable costs, non-allowable. We're looking at payroll. Honestly, every forgiveness application we've done has been strictly payroll at this point because they extended it from the 8 weeks to the 24 weeks. So everybody just kept spending it on payroll, and we've not dealt with interest, rent, utilities, but you can. So it's gotten a little easier. Again, the Payroll Protection Flexibility Act was the big update they did in June, and it changed it from 8 weeks to 24 weeks. Opening that up was very beneficial to all of you healthcare providers. It allowed you more time to just spend it on normal payroll and be fully forgiven. They added some safe harbors and exceptions and safe harbors to the forgiveness reduction rules. We'll go through those. It changed it from having to spend 75% to 60% on payroll. Again, not really relevant to you guys because you're so payroll heavy. It also pushed everything to the end of the year. It allowed you to take advantage of the payroll tax deferral option. And then it changed it from 2-year loan to 5-year loan. So payroll is still capped at 100,000 annualized. If that's an issue for you, you will want to look at these things. If it's, you've got it, like if you were on an 8-week period, your cap is 14,835. If you went all the way out to a 24-week period, each person could be 46,154. Basically, it's 100,000 divided by 52 weeks, which gets you this 1923 times however many weeks you used your PPP loan. Okay. I'm not going to dig into this detailed. There are different rules for the owners. Basically, you can only use 2.5 months because that's what we calculated the loan on, versus you can't use it for the full 24 weeks. There are some special limits for self-employed. Okay, no deduction for PPP expenses. This is ugly. They're still fighting it. This is the big news of late. The news is not that, yeah, it's going to be taxable. The news is we were hoping, us tax planning people, we were like, okay, cool. So you may not get forgiveness this year. So let's deduct the expenses this year and then claim the forgiveness as income next year and then not pay tax on it till 2022. Part of me, now that the election is over, doesn't really like that plan because I know what my tax rate is for 2020. I don't know what it's going to be for 2021. So there's that to consider. But then the IRS came in and said, oh, not so fast. If you think you're going to get forgiveness, you cannot deduct those expenses this year. And they're taking a really hard stance on this. So we are being very conservative. If you get forgiveness this year, it doesn't matter. You couldn't push it to next year anyways. What they're saying now is, even if you don't have forgiveness this year, but you're going to get it, or you reasonably expect to get it, you cannot deduct those expenses that you claimed, that whatever expense you filed with your forgiveness application cannot be claimed as expenses on your tax return. And next year, when you get forgiveness, let's say it gets reduced by 10,000 that you weren't expecting, then you can adjust next year. How did they say that? You can reduce your expenses next year or increase your expenses next year to make up for that. You could probably also file an amendment. I know what we're going to do is we are not going to file tax returns until forgiveness is given. So that means we'll probably have a lot of tax returns on extension. Maybe we've got a lot of, We have about 60 PPP forgiveness applications that we're processing. We've got almost half of those either in process or to the bank, about a third are to the bank. So that's about 20. Only maybe 5 of those have come back as approved. I'm expecting kind of a wave of them to come through, and I really think it's going to be at the year after year end, but we'll see. But I think once they start flowing, they'll flow quickly. I know that the banks are doing them in blocks, right? The bank isn't sending in every single application one by one. They're sending in blocks of applications to the SBA for the SBA to approve. The other thing I know is don't expect anything. I really was expecting like some kind of formal letter, almost like you signed a note agreement. I figured there would be some kind of formal agreement of the forgiveness, but there's not at all. It's just an email. We've gotten email from the bank saying, hey, the SBA fully forgave your loan. And then, and one even said, and I checked your loan balance and it shows 0. So sorry, my banks are driving me crazy right this moment. So I'm not sure what every bank is going to do, but don't expect some big formality. I kind of really expected more. Let's see, forgiveness overview. Up to the full amount, you cannot be forgiven. If you spend a whole lot more, you're not going to get more forgiven than what you were granted, than what you're loaned. Again, you apply directly with your lender and then they submit it and they give you almost like a conditional approval. And sometimes the banks aren't even telling you if they've passed your file to the SBA. So the communication has been a little lacking. The application can be filed after day 56, which was a long time ago, but no later than 10 months after your covered period. So if you went the full 24 weeks, then you can start counting 10 months from there. So you've got some time. Now, if you don't file it, they're going to assume you don't want forgiveness. We're recommending just file it and get it over with. That's what we're kind of wanting to do. I know for us, we will probably stop taking forgiveness applications when busy season gets here, because we just, it's busy season. So we're trying to get them all in now. And then the lender has 90 days to make a determination. And then the SBA has 60 days to answer them. So from when you submit, that's really 150 days for you to get an answer back. So it's several months really. So it could take a little time. Here's the calculation in a nutshell. Total eligible expenses minus a reduction due to any salary wage reductions, less the reduction due to FTE reduction, less the reduction due to not spending it on 60% payroll, which nobody here will have. And then that equals your forgiveness amount. Then you have to reduce the amount forgiven by your idle advance. If you went on to SBA, this was early on, and you said, yes, I'm interested in an idle loan, and they say, oh, great, give us your bank account and we'll give you an advance up to $1,000 per employee, up to 10 total. So you may have gotten a $10,000 advance. You had to go apply for it online, super easy. If you receive that, then that reduces your forgiveness. It is not on the application that way, but you need to be aware of it because you might get 100% forgiveness, but you got to pay back that advance portion. But then that gives you the total amount forgiven. I know I've got questions stacking up. Let me keep getting through some of this material and then I'll get over to them. Reductions to forgiveness. So there are 2 ways that, well, 3 really, that your forgiveness can be reduced. If you went and reduced wages or salaries, like you had somebody at a $75,000 salary and you said, I've got to drop you to $50,000. That's a reduction. If you had somebody at $75 a visit and you had to reduce them to $50 a visit, that's a reduction. If they had a reduction in total wages because their hours went down or their visits went down, that is not a salary or wage reduction. That has been clarified in the FAQs. We know it for certain. That saved a lot of PAS providers and a lot of agencies out there. So if you did not go through and reduce, and it only takes one person, any one person more then yes, it's really based on the hourly rate. But if you didn't reduce it more than 25%, now if you reduced it 10%, you're still okay. But if you reduced it 25% or more than 25%, then you get a haircut on your forgiveness amount. Now, there's an exception. If it was a highly paid, highly compensated individual, let's say you had somebody at 175 and you reduced them down to 100, for this rule, so far you've given them zero haircut because now they're at 100. So anything you reduce that's above 100,000 doesn't even count. Now, if you take them from 100 down to 60 as a 40% reduction, then that starts eating against you. But so if you had somebody at 175,000, you can bring them all the way down to 75,000 before you start having an impact. And that's because from 100,000 to 75, that's a 25% reduction. Once you go below that, then you start getting this haircut on your forgiveness, and it's dollar for dollar. So if you dropped them to $5,000, then you'll have to pay back 5,000 of there'll be 5,000 less in forgiveness. So it's really just kind of not worth it. Just keep them up there. Nobody I've talked to has that issue. Reduction in full-time equivalent employees. This is a much bigger issue. So let's circle back around to it. The other one, again, also doesn't affect you guys really. Reduction due to payroll costs not meeting at least 60% of total spent. Nobody in our industry has this problem unless it's some kind of a holding company, management company. You do have to spend at least 60% of what's spent. 60% has to go to payroll. Can't just be rent and utilities and such, okay? So back on the FTEs, there's some exceptions to this, but they're really saying if you've reduced FTEs, you get a haircut. If you reduce them 10%, you get 10% haircut. So let's go through that a little bit. And it is 11 o'clock. Okay, so we got 30 minutes. And like I said, if you missed it, I am wide open. So I'll stay here as long as you guys want to ask questions. So we just discussed the salary and wage reduction. You're good unless you did some drastic salary reductions. And the comparison period that you're looking at, okay, well, versus last year, 2019, no, it's versus first quarter. So it's first quarter versus where they are during your PPP period. Again, this is where it does not penalize you if their hours went down, because that'd be like a double haircut, because their hours going down is going to be your FTE count. So you don't want a wage haircut and an hour haircut. I mean, that's double penalty. So we've got a lot in here about the salary and wage reduction. I told you I try to really pack these slides full. Okay, FTE reduction. The main thing that we don't know yet is what happens, at what date do you have to reestablish that FTE count? And we'll get to it. Well, we don't know yet, but let's get there. So you've got 2 base periods and you get to pick which one you want to use, either 2/15/19 to 6/30/19 or January and February of 20. So James, here's interesting. They're letting you pick which year to count your FTE, but not which year to count your revenue. On your question where you've been scaling, right? If you could compare your revenue in April versus January, February of the same year, they would see the drop off, but they didn't go that route. That's HHS. This is PPP, which is coming from SBA and the IRS, really from Congress more so. Anyways, you get to pick which of these periods you want to use. I say you go with the one with the lowest FTE count, okay? There's a lot of dates in here. For these purposes, to calculate FTEs, you're taking total hours paid for that period of time divided by 40 hours a week. If you got 10 weeks of payroll, that's 400 hours. If it's 1 week of payroll, it's 40 hours. So you've got to figure that out. We don't like this alternative method right here, because basically you use one if they worked overtime, 40 hours or more, and you use 0.5 if it was less than 40 hours. If you've got a real simple agency, then maybe the better way is just take total hours paid divided by 40. You're going to calculate your baseline, and then you're going to compare each payroll during the covered period back to that baseline. Now, this gets super detailed, but we've got some safe harbors. So what I'd like to do is let's get to those safe harbors and discuss them. Well, safe harbors and exemptions, they're kind of one and the same. All right, exemption number 1. You can exclude any reduction in full-time equivalent because of these reasons. You couldn't rehire an employee, right? If you had an employee, they quit, they got fired, you laid them off because of COVID, but now it's time to rehire and you can't hire somebody, then this is your out. This is your get out of jail free card on that, okay? This tells you the details that you need to follow. So, I mean, that happened a lot with PAS when they were on unemployment. Like, you didn't have any work for them, so they went to unemployment and now you can't get them back. This is your get out of jail free card. So exception number 2, if you had to fire somebody for cause, they quit, or they requested a reduction in hours, then again, get out of jail free card. And then exception number 3, this is the one that's in question. They came out with this that says if you could not reestablish FTE levels because the business was not able to restore to full operating levels due to COVID-related operating restrictions, or you can't find qualified employees to fill positions. If you can't find qualified employees to fill positions, get out of jail. This right here is now being called the business activity safe harbor. And there's a lot of kind of questions. Some of the professionals are digging into this. It's kind of funny. I'm like, why you guys got to be so skeptical? Just read it in a positive light and it's all good. But they're digging down, and I like it because you need that devil's advocate, right? To prepare us. They're saying, and I don't, it's in here somewhere. I'm just going to talk about it now. Basically, they're saying that, how do you apply that rule? Because as healthcare workers, your business was not shut down by COVID restrictions. Now, your patients may have chosen, because they wanted to isolate, to not have services, but that was their choice and not your choice. And so there's this question, are you going to qualify under that business activity safe harbor? We're pushing forward that you do. We may have to go in and do some thorough arguments and document that. We may come up with a generic standard one to apply to everybody. But if somebody has a reduction in FTEs, we're going to need to look at that closely and see if we truly feel like, well, we're going to just keep waiting for more guidance and interpretation and see how it gets applied. I will say so far, we've used that on some of the forms, the forgiveness applications that we filed, and those have been approved. Now, I don't know if they were used on the ones that got approved, but we'll see. This is another safe harbor, is basically if you had to reduce FTEs and then you brought them back, then it's a get out of jail free card. Again, this is a little squirrely though, because it says, if the FTE was reduced during this period and then restored by this period. But what happens if it was reduced after 4/27? Does it count? And then what if you were still in your PPP period after 6/30, but you didn't go all the way to 12/31, right? Because 12/31 is the final, but let's say, like, we had a lot of people, they took 10 weeks, 12 weeks to spend it all, but that was the end of their period, was 14 weeks. So then did they need to restore it by the end of their period or by 12/31? And let's say if it is by the end of their period, and let's just say that was August 15th, do they then have to carry it from that full-time equivalent from August 15th to December 31st? Like, we don't know, but that's all still very, very foggy. I'll tell you the one good thing is that the banks don't want these loans on their books. They don't. They do not want these loans on their books. So they're going to be doing what they can to get you approved. So we'll see then what the, oh, there's that slide I was just looking for. Then we'll see what the SBA says about it. So let me make sure yeah. So we still need more clarification on that. Let's go through this last slide and then I'll go answer some questions and then we'll jump into what the easy form looks like. Again, if you had an advance, then your forgiveness is going to be reduced by that amount. Pretty simple. Oh, and I had a thought, but I forgot it. Okay, let me jump into these questions. As I recall, my original PPP amount was determined on a number of weeks average payroll in 2019. Okay, Stuart. So the period in which he's asking like this, so it's 8 weeks. Originally it was 8 weeks and then it was 24 weeks. It's not just any 24 weeks in 2020. It was based on 10 weeks of payroll in 2019. That's how much your loan amount was calculated on. Then originally you had 8 weeks from the date you received the loan, 8 weeks started counting, you had to spend it. They opened that up to 24, but your date starts the day you got your loan. And so you're going to count your payroll from that period until either the end of either it's fully spent or 24 weeks is up. If you go all the way to 24 weeks and you haven't spent it all on payroll, or you don't want to go all that time, you can also claim rent, utilities, and mortgage interest. The problem with that is to document those, the banks are going to push you to just use payroll. Because the great thing about documenting it with just payroll, you do one payroll report for the whole period. It's a lot easier. And so we've had bankers saying, do you really want to go dig out all those? Because on utilities, you've got to show that they existed prior to loan back in February. They had to exist prior to 2/15. And then you've got to show loan agreements, lease agreements. You got to show all your payments, proof of payment. So it's kind of a lot of work. If you could just do it in payroll, then it's easier. So that's kind of what that answers that question, I hope. Are we still allowed to use either pay date or pay period? Yes. Again, when it opened to 24 weeks, we just went on pay date. We didn't worry about accruals. Everybody we worked with spent it anywhere from 10 to 16 weeks. I don't think anybody went quite 16 weeks. So lots of time there. Cash for a cash basis taxpayer. I'm not sure what the question was. I'm sure I had to do it with Linnell. If you'll post the full question, I'll try to get that answered. Is there a difference for SBA loan and a lender loan? Not on the PPP. So if it's a PPP loan, it came from the lender and it's backed by the SBA. So what physically happened is the bank loaned it to you. It's the bank's money. They gave it to you. Now you're saying, hey, I spent it according to plan. I want forgiveness. The bank says, okay, everything looks good. They submit the forgiveness to the SBA and says, hey, this loan is good for forgiveness. Give me my money back. And the SBA says, looks good. Here's your money. And they pay the bank back basically on your behalf, kind of. And so now the bank is made whole and now you have no loan payable to the bank. So I hope that answered it. I filed for forgiveness with the bank and they turned into SBA and it has been forgiven. I received a letter from SBA. Okay, cool. I've not seen any letters from the SBA yet. So maybe they'll be forthcoming. We are a PAS company. It states for provider relief funding eligibility for our purposes, we must have billed Medicaid, CHIP, or Medicaid managed care plans. Yes, that's true. think I would have to go back to those FAQs. I don't think they supplied any money to any straight private duty payers. If you are Medicaid or Medicaid HMO, then you're good under those as long as you've been billing for it. So I'm not sure what the exact question was. Okay. If you're using a 24-week covered period, when is the date you use for the salary reduction FTE count? Is it at the end of the 24 weeks? That's exactly what we don't know. My thought is yes, I would start there and see and compare to the end of the 24 week. And we don't know, is it that or is it December 31st? Because it's not clear. There's no guidance on that yet. Okay, this agency received a $10,000 EIDL grant, but did not receive a PPP loan. You do not have to file for forgiveness and you do not have to do anything. That's just a grant and it's not due back to the government. Good question. Here's a good one. Two entities with the same owners, one received PPP loan, the other received EIDL grant. I do not think that you have to cross those over. So my comment would be no, you do not have to reduce this PPP loan for entity one by the grant that entity two received. So I'm going to say no on that. If you need more than 8 weeks, but not the full 24 weeks, do you use the date of the last payroll period in which the money was spent to calculate? Yes, that's what we're doing. We're using the last check date of the last payroll needed to satisfy to spend all the money. And yes, we'll then use that to look at wage reduction and the FTE reduction. In calculating FTE, do you count full-time salary workers who do not clock in as 40 hours a week? Yes. And I would, Anthony, I highly recommend, I've actually been working with my payroll partners on this, that if you've got salaried people, it's fine that they don't clock in and out, but you need to input, your payroll system needs to show 40 hours a week either. So if you're biweekly, meaning you pay every other week, that means it would be 80 hours per check and it can just default. They don't have to clock in and out. If you're semi-monthly, meaning you pay twice a month, like the 1st and the 15th or whatever, then it would be the standard hours, the way it calculates is 86.6667. But your payroll company will know that. I recommend that you put those hours in there. We need it in so many facets of cost reporting, all this, and it's just good to know, because otherwise you look at your payroll reports and you got salaried people and there were no hours. It just doesn't work. It doesn't provide any value that way. Can payments to therapy companies that are 1099 count for forgiveness? Great question, and no. It's been very, very clear that that cannot. The reason why is because the therapy company could have also applied for a PPP loan and use it because they're paying their staff as employees, and even your individual contractor, like, you know, Susie Q that comes and does ST visits for you, she could have gotten her own PPP loan. And if she does that and pays herself and you claim your payment to her, then it's double dipping with those PPP funds. If we have money left from provider relief in January, what do you suggest we do? We may need it later. You have until June 30th. I absolutely recommend saving it. I mean, you may need to stock PPE again. There may be other things you need to do. I definitely, well, A, you're going to want to look at your lost revenue, but then B, save it, but you have until June 30th. Now, June 30th comes, or if it's approaching and you still haven't spent it, I would start getting creative at, like, is there anything we can do that we can call it COVID related, that legitimately, but I would look at things like improving technology, improving work from home capabilities, improving social distancing, any of those things that you can spend some money on that then would qualify and allow you to keep that money as opposed to paying it back. And then you can even look at stuff like if you haven't gone paperless, it's a massive thing. Trust me, I know. I did it in 07, fortunately, and we were way smaller then. And I can only imagine for an agency what that would be like. But like, to me, that could be COVID related, because you are making yourself better capable to respond to COVID by working at home and working remotely. Maybe that's an investment you make if you have money left over. So kind of some ways to start thinking about that. When is the forgiveness application due? It's due after the end of 24 weeks. So if your loan was early, like April 10th, count 24 weeks and it's 10 months from then. If it was later, then it's going to be 10 months. You may not, I think even if you got in the very last round was August 5th of PPP loans, I don't know if 24 weeks gets you to 1231. I'm not sure. So it's 10 months from the end of 24 weeks. If you have spent on payroll what we were given in a PPP loan, can any additional payroll be used towards HHS stimulus? Great question. I'm glad you brought that up. So what I recommend you doing is when you're looking at your PPP and you've spent all your money on payroll, run that report for the whole period. Do you have any COVID wages in there? COVID wages, COVID bonus? If you do, my recommendation is you exclude that from your PPP calculation for your forgiveness, and you include it over on HHS side. Now, it's important that you exclude it from PPP if you're going to add it to HHS, but because you don't want to double dip. But that's being very strategic with how you spend your money. HHS, when you're reading through it, says you can totally spend it on wages, but it also, I don't think they're going to cover just everyday wages like PPP did. So it needs to be COVID specific. So that's where you get into like a COVID compliance officer or regulatory, somebody doing regulations, or like I had somebody that a small agency, and they had a lady working for them, and she did this and that. When all this hit, she went 100% into COVID compliance. And I said, give her a title, document the job description, and make her wages say COVID. So it can be spent on COVID wages. Okay, can we go back from March and pay the deduction in hours for the office? Deducted because less work in the office. Oh, okay, can we go back to March? I know for your PPP loan, oh, okay. I think you're probably talking about HHS. So HHS money, this is Lily. Can we go back from March and pay those deductions? So you deducted people from office employees because they worked less in the office, so you didn't pay them. Can you go back and pay them and call it HHS? That's a little aggressive. But I don't think it's unreasonable. You know what I would probably do instead? I would calculate it, but I would call it a COVID bonus. Like, pay it now. Bonuses are standard now, right now, right? Because it's Christmas time and everything. I think that's what I would do. I would maybe go back and say, okay, this admin staff was docked 20 hours at her regular pay rate. I'm going to make it up via bonus. I think that might fly a little bit better. So there's that. So do I mean that any bonuses paid this year to employees can be classified under forgiveness, not forgiveness, but under HHS due to their heroic efforts to attend to patients without knowing their exposure? Yes, I think so. That's my stance. I will stand firm. I would go to bat for you. I would argue it for you. And if you're a PAS provider, those wages count on your rate enhancement. How are you handling PPP loan forgiveness? Reducing payroll expenses? No. Oh, don't get me on the QBI. I don't know the answer to this. I'm just going to be very honest. So QBI is qualified business. What's the I stand for? Income. Anyways, it's this deduction that came about with Trump, and I won't even tell you my story about it. because somewhere the accountants did not have lobbyists in there, and we were specifically excluded along with architects. So we don't get this deduction. But besides that, I'm the cost report guru here at the office. Cost reporting is my passion. Tax is not. So I have a tax guy. He knows that stuff inside and out. I know there is a lot of talk about this, but I do know that the guidance has been given, at least from the cost reporting standpoint, that says do not reduce your wages, your payroll expenses, by the expenses forgiven. Basically, what we're doing is we're recognizing other income for a multitude of reasons. What I want to see is I want to see your normal P&L. I want to see what you did this year with COVID, not with all the extra help. And so what we're going to have is our regular P&L. It's going to have everything in there. We will have a separate class if we want to run it that way for HHS expenses. But for the main thing, they're rolled up and they're still in, medical supplies and wages are all normal. We always agree, our wages always agree to the tax return, the payroll tax returns filed. Then at the bottom section, so like in QuickBooks, it would be other income as a type. You can set a type as other income and call it HHS stimulus and PPP loan forgiveness. And so the amount forgiven, we're going to record it. Basically, we're going to take it off of the balance sheet as a note payable and put it into that other income account. That's what we're doing. So I don't know how that affects that QBI. That's outside of my realm of expertise. We can handle it here in the office, but I'm not prepared to answer it here. I need Paul, and Paul's on vacation right now. Can we get a copy of the PowerPoint? Yes, it'll go out it'll go out probably on Friday. How do we report HHS expense to the state through that portal and how? So Stella, we don't know that yet. There is going to be a portal. They're going to supply worksheets for us and it will be done online, but it's supposed to be available January 15th. Again, I kind of think that'll probably get pushed a little bit, but we'll see what they come up with. Can you use HHS monies as hazard bonus? Yes. Yeah. And is there a stimulus forgiveness app? No, it's going to be a reporting requirement. I'm sure everybody will get an email about it saying, hey, your reporting is due. We'll be all over it. We'll be notifying everybody. So, I mean, I wouldn't even be surprised if I didn't just get on and do one of these. We have enough work that I don't need to hold secrets of how to do that reporting. We are happy to do it for you. But if I can do a class and show 200 people how to do it, I'm happy to do that. So you can do it on your own. We expect forgiveness of health in our cash basis. Do we recognize the income in 2020 and don't deduct? Yes. So Lindell, yes. If you expect forgiveness on your PPP loan and your HHS Provider Relief Fund, you're fully spending it, then you are, and your cash basis, you are definitely going to you're going to recognize the income. HHS is directly just recognizing income. That'll be in 2020. And then the PPP loan, you will not deduct those expenses in 2020, which is kind of the same way as saying recognize income on the forgiveness. It's 6 one way, half a dozen another. And yes, now I don't know how that's going to affect accrual basis, and we have very, very few, if any, accrual basis taxpayers. What other? Let's see. Okay, we have had to start mailing all paychecks since March. Would the cost of yes, great question. Let me finish it. They've had to start mailing all paychecks since March. Would the cost of postage be considered expense for HHS? I think that's a good idea because you did that because of COVID, but that's when I would document, like, why did you do that? Why did you have to mail them because of COVID instead of direct deposit? Or maybe you weren't on direct deposit, but everybody picked them up. Just put a little memo, even if you created a memo to your staff, hey, from now on, we will not have paychecks available at the office. They'll be mailed to you. Use that. But that is a great idea. I've got some questions over here in the chat. So let me. Oh yeah, Dave, yes, they absolutely did. I'm sorry, I'm reading to at the same time. They did define FTE different than ACA. It doesn't matter though on the FTE definition. Actually, what they did was they went with a standard definition. ACA is the one that's out in left field. But it doesn't matter which one you use as long as you use the exact one each time, because you calculate it before, you calculate it after. You just want to use the same formula. That's all that matters, because you're just looking at the change. And that's as long as you use the same formula on the front end and the back end, it doesn't matter. Okay, James had to go, and I will send everything. Let's see. If you start with 24-month period with a higher gross number, is there any downside to start with a higher number possible? Yes, Dave, you could calculate it both ways and see whichever gets you the highest forgiveness possible. Okay, that covers chat. Let's see, we are at 11:30. Okay, not too bad. I just got a few more slides in here that actually, so we've really been focused on the EZ form. There was a change a little while back where they came out with a simplified form if you were under 50,000, which kind of was a bursting bubble to me. Because there's a big push for anything under 150,000 to be blanketly forgiven. And so for them to come out with a new process for 50,000 and less kind of means they're ignoring, why would they do that if they're going to blanket forgiveness? I don't know. So they came out with a form that basically you don't show any calculations. You're just attesting that you did it right and you spent everything right. That's if you're less than 50,000. But we've focused on the EZ form. There are 3 scenarios, and you have to qualify under one of these 3 scenarios to file with the EZ form. Number 1, if you're self-employed, independent contractor, sole proprietor, and you had no wages for anybody else, you can file on EZ. Now, number 2 and number 3 get a little bit more complicated. Number 2, if you didn't do any wage reductions and you did not reduce the number of employees after considering exemptions and safe harbor rules, then you can use EZ. Or number 3 is you did not reduce wages and you could not restore operations back to the same level. So this activity, business activity safe harbor, then you can use this one. Okay, so you have to check which of these scenarios do you fall under to use the EZ form. It's got demographics you got to put on there. It's got your forgiveness calculation, and then it's certifications. So it's 3 or 4 pages long. It's pretty simplistic. Here's so the first section is just your demographics. And what's happening is the bank that you got the loan from will provide you with a link. This link is specific to you. That's the link that you go apply for forgiveness. And in that link, they have most of your data there. They got your name and address, and SBA loan number is usually there. And so they've got your data, so it takes care of that first section. This is the full calculation in its glory. It's simple. What were your payroll costs, mortgage interest, rent, and utilities? Add them up. Here's your loan. Divide by 60% to make sure you bet that 60% threshold. Here's your forgiveness. It's that simple. What they don't have on here is that EIDL loan. I don't know why they didn't. The EIDL grant, I don't know why they didn't further reduce it by that. Just need to be prepared. That will come off as well. Required documentation. So we're seeing 2 different standards. If your payroll is processed through an ADP or some outsourced payroll provider and you are providing payroll reports from them, that's been sufficient, along with any calculations or worksheets. If your payroll is in QuickBooks, you got to provide more. You've got to provide some payroll, some bank statements that show payroll actually leaving your account. because I hate to say this, it's very easy to create a QuickBooks file, run payroll, act like you got a full company, and there not really be any payroll whatsoever. So it's very ripe for fraud. So they are digging deeper. If you're on QuickBooks payroll, you're going to be required to provide more. Also payroll tax forms. So your quarterly forms are on there. And then documentation reports for your FTE calculations. This is if you're doing the other expenses. There's a lot more that they want, so you can read that at your leisure. And also, but I do want to note, especially if you're using one of those safe harbors that you couldn't rehire people, make sure that's all documented and you're saving all of that. Offers, if an offer is declined, make sure it's in writing. Email is writing, and that's okay. Document it, save it all. So what if you don't get forgiveness, or 100% forgiveness? Then the rest stays on a loan, and it depends on when you got your loan. If it was prior to 6/5, you're going to be on a 2-year note. If it's after 6/5, you're going to be on a 5-year loan. It's at 1% interest. You can pay it off. You can pay it off at any time. So there's really no big harm with that. Here's kind of a big, broad overview. Again, the forgiveness applications go to the lending bank. They are now all taking applications from what I see. Now, if you have a small loan under $150,000, they may or may not take forgiveness. The reason why is because the Bankers Association has a huge push out there to force the government to allow blanket forgiveness for anything under $150,000. We've been talking about that. I think the election got in the way. Now that that's over, the push is going to be back on. Here's the statistic. It says basically 85% of the loans out there are less than $150,000. But the dollar amount that accounts for is only 26% of the dollars out there. So they're basically saying, hey, there is no way we can process all these forgiveness applications. It's a small amount of the total loan dollars. Let us focus on the big loans and let us just forgive these little loans. So that's the push that's out there. So if you're under 150, you're welcome to go ahead and apply for forgiveness. We've gotten some forgiven. But if you don't want to and you're waiting for blanket forgiveness, then by all means, wait for the forgiveness. Just kind of watch that clock of when your 10 months is over and make sure you get it in before then. And I'm sure some banks are starting to send invoices for payments due. That's a discussion you need to have with your banker. Some of it is just automatic, but you want to watch for that. Here are those links that I mentioned. This website, this Provider Relief Fund, I literally Google, I don't even have bookmarked. I say HHS Provider Relief Fund, it just comes up. Those questions, that FAQ section is massive and very good, and they're dated when they were added, so it makes it easy to review them. I will say I went to the SBA, the Treasury website last night, and they no longer have their COVID banners, so it's harder to dig down to the CARES Act and then assistance for small businesses where you will find the PPP stuff. So the way I download this PowerPoint into PDF, these links will be live. And so you'll be able to get those. So I got some more questions. Kingsley says, I don't get the point about extracting COVID payroll from the PPP funds and then applying it in HHS. The reason is because HHS will only cover COVID related payroll. So if you have COVID related payroll, it makes more sense to put it under HHS funds if you need help spending those funds. If you've spent your funds with PPE and fixing your office to social distance, then it's not a concern. But if you're trying to find ways to spend that money, which I'm hearing a lot of people are, then PPP will cover regular wages. So just stretch it out another 2 weeks, take your COVID wages out, carry it for 2 more weeks of the forgiveness period, do just regular wages and take your COVID wages and put them over on HHS. And then also maybe your PPP is done, but you're wanting to do some COVID bonuses, that's legitimate for HHS expenses. So that's the rationale there. I hear rumors that the PPP program may be coming back with new administration. How correct is this? I don't know. I'm with you. I'm hearing rumors. I haven't heard a lot about it. I think they're still trying to settle the election, there's still a lot going on there. So more to come on that. I haven't heard big talk of it lately, so we'll see what happens. I will answer this one in private. If we receive more PPP money than we can use, do we just give it back? Yeah, absolutely. If you got more PPP money than you can qualify for forgiveness and you don't want to use it as a 1% loan, then you can absolutely pay it back anytime at forgiveness or anything. If I got 180 and only used 127, no. That's a really good question though. So she says, if I got 180,000, but I only used 127 for payroll, will it be considered for blanket forgiveness? Because what they spent is under the 150, but what you received is more than, so no, you would not. So is the forgiveness only 60% of the payroll costs and not the, no, Blanca, you can be forgiven for the full loan amount. The restriction is that at least 60% has to have been for payroll. If the office space is owned by the agency owner, never took rent for years, can we claim it now? No, they've been clear on that. They want to see there was a lease in place prior to February 15th with proof of payment, because it's easy to document a lease effective January 1, but they want to see that it was paid. So that's why we're recommending, if you can cover the whole PPP loan, which is payroll, it's easier, because if you want to include rent, you got to have the lease, you got to show previous payments, and then you got to show payments during the period to qualify for forgiveness. If the stimulus payment is just 41, hold on. Okay, 150,000, not over, not under, then which way to go? If you got exactly 150,000 on stimulus, that there's no impact to that. So that you might have meant on PPP loan. I would say it would go for forgiveness. It will be anything 150 or less if that happens. Okay, and then it says somebody asked, are we doing PPP forgiveness loan applications? We are. Right now, we are just for the EZ form. If it's a complicated form, I need a different engagement letter. If it's one of the other forms, if we can get it done on the EZ form, we're charging a fixed fee of $1,500, and there is an engagement letter on our website. So if you go to our website and the banner at the top says COVID assistance, click on that. That takes you to our COVID page. If you go down to the bottom, I don't even know what it says. I don't know if it says get started now, but there's a button to actually complete our engagement letter and get you in the flow of that. So if you want in on that, I highly recommend it before year end, because we might have to stop taking new PPP clients after the first of the year. And that's not a fear of missing out, trying to scare you into it, I promise. What other questions do we have? That's the end of my presentation. I'll go to, here's our website, email address, email me. We are consulting. You can also sign an engagement letter for just $250 an hour just to answer questions and schedule time on our calendars. Just email me if you are interested in that. And again, I recommend subscribing to our YouTube channel. I need to figure out how to organize it, I think, but there's a lot there. Will there be another presentation for HHS soon? Because we're still working on PPP now. We'll need more info. I don't know that I'm going to do another one. I'll probably do one once the reporting comes out. And so watch for that. Otherwise, this one will be on demand, and you can always kind of go back and listen to it again. When I say on demand, it's just on YouTube. So that will be there. It's not, those links don't go away. They don't expire. So you're welcome to listen to it, but appreciate everybody that was here. I don't see any more questions. You're very welcome. Somebody said thank you. And you guys are welcome. I appreciate you guys supporting me and let me talk to you and trusting me. So I hope I'm able to answer those questions. And if you need anything, you know where to find us. Thank you. Everybody have a happy Thanksgiving. All right. Bye, y'all.